Hello, my name is Jose Aurelio Fiorio Weberhofer. I am an independent researcher in finance and economics with a focus on exchange rates, commodity-linked currencies, and applied econometric analysis in emerging markets. In this video, I analyze the relationship between Paraguay's exchange rate measured as US dollars per Paraguayan guaraní, and international soybean prices, one of Paraguay's most important export commodities. Paraguay is a commodity exporting economy, and soybeans represent a major source of foreign currency inflows. As a result, movements in soybean prices can influence the supply of US dollars in the domestic market and therefore the USD PYG exchange rate. I used daily data with perfectly aligned trading dates, and I estimated a simple linear regression model in which the dependent variable, the Y variable, is USD PYG exchange rate, and the independent variable, or X, is the international soybean price. So the model can be written as USD PYG equals the alpha plus beta times the soybean price. So let's go to the regression analysis of the soybean, and we can see that the estimated correlation coefficient is approximately minus 0.69. This indicates a very strong negative relationship between soybean prices and the US dollar PYG exchange rate. In economic terms, this means that when soybean prices increase, the Paraguayan guaraní tends to appreciate against the US dollar, resulting in a lower USD PYG exchange rate. I then estimate the regression model. The estimated slope coefficient is approximately here minus 1.15, 1.149170054, and is highly statistically significant with a p-value of almost 0. The estimated regression equation will then be, let's write down the equation here. And US dollar PYG equals 8,795.54. That's the y-intercept when x is equal to 0, minus 1.149170054 times the soybean price. Okay, that's our equation. Let's font, let's do this 20, because this is a very critical equation. And let's make this, let's move it here. So this reflects that higher export prices increase foreign currency inflows into Paraguay, strengthening the local currency. Unlike some exchange rate regression, where the coefficient appear large, the magnitude is economically reasonable. Soybean prices vary in relatively small dollar increments, while the guaraní is quoted in thousands per US dollar. The R square is approximately 0.48, meaning that nearly 48% of the variation in US dollar PYG exchange rate is explained by soybean prices alone. For a single variable regression using daily financial data, this represents a very strong explanatory relationship. This analysis does not claim causality. Exchange rates are influenced by many other factors like monetary policy, capital flows, global risk sentiment, domestic macroeconomic conditions, political conditions, social, etc. Nevertheless, the results provide a very strong empirical evidence that soybean prices play a meaningful and economically significant role in Paraguay's exchange rate. So this analysis confirms that Paraguay behaves as a commodity-linked currency economy. Movements in key export prices are closely associated with exchange rate fluctuations. In the next video, I will be examining the relationship between the US dollar and the PYG, the guaraní, and cotton prices. And then in a third video, I will estimate a multivariate model, including both commodities, soybean and cotton simultaneously. So this will allow us to assess whether soybeans and cotton have independent effects on the exchange rate or whether one commodity dominates the relationship. Thank you for watching.